What's up, traders? Hope you're having a good trading day. So, GameStop has been in the news the last week because it's practically doubled in price. And the reason is because of a short squeeze. So, how can we make money off of short squeezes? Well, that's what I'm going to talk about. So, short squeezes are where a lot of investors, hedge funds have sold the shares short. In other words, they borrowed the shares so that they can sell them in hopes that the market or the stock goes down. They profit from it going down. But the problem is, if the stock goes up, they lose money. And anytime somebody's losing money, what are they trying to do? They're trying to mitigate those losses. They may be stopping out or they'll have to close their shorts. And what you see here, in addition to some bullish news that can be interpreted either way, you're seeing people being forced to cover their shorts, taking losses. It's a panic. And that's because they're just trying to avoid losing money being on the wrong side of the trade. And this is nothing new. Another very popular short squeeze is, of course, Tesla. Tesla very famously shorted back in 2018. It set records. In fact, it's still setting records for the amount of people that have shorted the stock. There's a lot of people losing a lot of money from this point where everyone thought that Tesla was going to go bankrupt all the way up to here. This is by and large a short squeeze as well as a bullish hype run. Another one that has happened in the past, very famously, was the Carl Icahn and Bill Ackman spat back in 2018. That's basically this run right here, where Carl Icahn took a position against Bill Ackman, who said that Herbalife was a scam and ran up the position, again, doubling the stock over the course of about 2 years. Very disastrous. He lost billions on this very public, wrong side of trade. So, how can we identify potential short squeezes? Well, I did a little bit of research on this because I wanted to figure that out for myself. I'm always on the lookout for new ideas and ways to profit. This is the process of trading. It's not about, that's the close of the market. It's not about a signal service. It's not about the latest new indicator. It's not about following some guru. It's having a thesis, having an idea in your head, and then researching it and going from there. So, one really good free resource to use is a website, Finviz, and they have a screener on here. This is free. They have, of course, an account that you can sign up for more data, but this is free. I'm going to go through this and show you how to set this up. So, on the basic screener, it's going to have pretty much every stock there is out there. We need to filter this down. So, what we're going to do is we're going to change this we're going to change this float short to over 30%. I'll talk about that, what that means in a second. And just to filter out some of the junk, we can possibly make the average volume over 500,000 shares. That's going to be shares traded average. Now we want to go to custom because we're going to set up a float short and a short ratio. These are going to be the two metrics that we're going to search by. All right. So now we can organize this list for our top shorted stocks. There's going to be a couple of things in here that are probably familiar to a lot of people. There's a little NKLA down there, Tilray. What else? Bed Bath and Beyond. Actually, I looked to see where GameStop was, and for some weird reason, oh yes, for some reason, it does not have any data, and that's why it's not showing up in my list right here. Yeah, it doesn't have a short ratio or float short. That's why it's not showing up. But we're going to go with what it does show. Clear that out. Back to here. Okay. So you can look at this and see what the data is showing. So the float short basically is the ratio, the percentage of shares that are short in relation to the float. What the float is the number of shares that are out there in the market for people to trade. So in the case of Weibo, WB, 71% of all the shares that can be traded on the open market are actually short. That's very high. The short ratio is the number of shares short divided by the average daily trading volume. This is also related to another thing called days to cover. What this means, or what this insinuates, is how long it would take someone that was short to clear out that position. In other words, if you have 1 million shares short and your daily average volume is 100,000, then that would be a 10-to-1 ratio. In other words, if you had 10 trading days, it would probably take you about 10 trading days to cover all the shorts, get out of your short position. So a higher ratio is a sign of it being more heavily shorted, as well as a higher float short, showing that it's more heavily shorted. So these are the ones that we want to look at. And you can go through this list and see what you want to see about them. There are a few that I looked at that I rather liked. And these are not suggestions, these are not solicitations to buy or sell any instrument. These are just combining my scanner that I set up, my thesis, my idea, with technical patterns that I like. I like Revlon. The reason I like it is because it's already survived one test on this earnings pump right here. And what it's done is it's pulled back to a 50% level. And if you watch my other videos, you know that I do very much like 50% retracement levels. And so that gives me a nice line in the sand to take a potential trade off that halfway point. And because it is a very low dollar value stock relative to, some of the past upside that this stock has seen, it has a very good asymmetric risk reward. In other words, the stock could go to zero, which would not be good if I'm long, but at the same time, the upside potential is much greater than the downside potential just because of the price. The other one that's a different strategy that I've also talked about in a recent video is CLVS. So then this is what I've talked about in my recent Ichimoku cloud breakout video. We've got price and momentum coming out of the cloud at the same time. Now, it's danced around the cloud in this fall off from the last year, but this is the first time it's actually getting out really bullish. And again, if we look at a longer time frame, we can see that it has, again, that asymmetric risk to reward. The stock could go to zero, but the upside potential is definitely there. So these are examples, two different technical analysis strategies that I've identified within my thesis that I want to look at stocks that are heavily shorted for the potential of a short squeeze. This is the process, and which is why I'm sharing it with everyone, of how a trader finds ideas. You don't have to use this, but this is the actual process that you can use to grow your trading account. It's not jumping into the latest hype stock after it's already moved 300%. It's not taking someone else's advice, especially not mine. Don't take my advice. Do your own research. But this is how you do research. Learn about what it means to be short shares and how people that are short can get squeezed. When you read these news articles about these things happening, they can be opportunities. Me, I'm a contrarian. So I really, really like the idea that everyone is betting one way and I'm going the other. So this strategy really, really applies to me. And that's why I was so excited to look at it, research it, learn about it, and share, because you learn more even by teaching. So hope you guys find this useful. Be smart, and we'll see you in the next video.